Hello and welcome to another edition of 9 to 5 Live. My name is Mark Williams and joining me is Francois Savary. Francois, hello.
Hello, Mark.
Thank you very much for joining us. Donald Trump won a landslide election result in the US last week. US stock markets greeted this with euphoria. I think it's the best way to explain it. What is it that US investors see as being so important about the Trump presidency? Is it sustainable? First of all, I'd like to go through the positives of a Trump presidency and then the negatives. Francois.
Okay, if I go to the positive first, I think that you have two elements that are helping the market and help to explain the performance that we had last week on the equity. The first one is the fact that the tax reform or the tax cut that was decided in 2017 is going to be prolonged, and that with the Congress and everything in his hand, he has the ability now to really make this tax cut permanent, and he could add another layer to the tax cut, especially for companies. That's the first element because it will support the earning per share. And the second element is deregulation, because we all know that he wants to deregulate the economy. And those two factors are the ones that explain why the market performed so well last week. On the negative side, you have, first of all, the tariff. It can be quite dangerous because it can add to inflationary pressures in the US economy. And by effect, you have the risk of the bond market. And already when you look at the behavior of the bond market, when the win of Donald Trump was clear, it was really a spike on long-term interest rates because of the risk of inflationary pressures, the risk of not enough work on the public debt. And I think that this is something that you need to keep in mind for the coming months.
The dollar spiked. It wasn't only bond yields that were spiking. What are your thoughts on the dollar?
I think that you are right. And in fact, the bond yield promoted this move on the US dollar because higher remuneration for the US dollar is something that is supportive for the US dollar against all the currencies in the very short term. But then you need to think in terms of what are the consequences of such a policy in the medium term. I think that if you do not deal with the public finance and the indebtedness of the United States, I think that there will be a problem for the US dollar. So I think that the dollar can remain quite strong in the very short term, but it's not going to be sustainable to my point of view. And the weakness of the bond market could promote some US dollar depreciation in the course of 2025. I'm not speaking about a huge depreciation, but I would not be if the US dollar is moving towards 112, 115 in the course of 2025.
Some commentators have been calling to lock in bond yields at these levels. They see it as being very, very attractive. What are your thoughts on that?
I'm cautious on that call. I refrain from purchase long duration bonds. I still believe that you are better positioned to be to short to medium term. You need to have more visibility on the exact plan, exact program of Donald Trump, and over the coming weeks, we will have nomination coming. We will have more visibility. But for the time being, I think it's too early. And I think that 4.5 on the 10-year bond yield or even 475, it's not something that is completely illogical, especially when you consider the fiscal deficit in the United States and the indebtedness of the United States that is really, really on a very bad path. And don't forget that an independent organization mentioned that the plan of Donald Trump could add 10 trillion debt for the US economy, 10 trillion debt. This is not something that is minor in the course of the next 10 years.
Coming to the Fed now, the chairman of the Fed, Jay Powell, reduced interest rates by 0.25% as expected last Thursday, irrespective of the results of the election. Bond yields actually went up slightly following that announcement. That's pretty unusual in itself. Is this something that worries you at all?
Not really. What worries me, in a way, what would have worried me is that if the Fed had decided to go once again for 50 basis points, because we have discussed that many times in this program. I believe that they went too far too fast in September when they cut by 50 basis points. Because at the end of the day, the US economy remained quite strong and the numbers do not justify to lower interest rates very quickly and in huge portion. So I think that what the market in a way did not like, and that's the reason why there was some tension on bond yield, is the fact that the message of Powell was a little bit more cautious about the path and the speed of the interest rate cut in the future in the US economy. He recognized that the US economy remains strong and the conditions are such that they need to assess the situation data by data, and that they need to do what is necessary in connection with the US numbers that are coming. Moreover, over the last week, you had some member of the Fed who spoke, and clearly you can feel that they are more cautious about the speed at which interest rates in the US will be lowered.
Markets are expecting earnings per share to rise by double digits next year, say 10 to 11%. Some people are calling even higher. Does the advent of the new Trump presidency, does that give us cause to look at those figures again and to upgrade them even more?
10 to 11 is something that was, in a way, already in the market. 10% was in the market. Some people are going to 15 because they look at the possible measures by Donald Trump and they say, okay, this will boost the figures, especially deregulation could provide some more support for the banking sectors, which would support the earning per share. You need to be careful with earning per share. And at the end of the day, why do you need to be cautious? Because it's quite difficult to extend over the number that you mentioned. To go above those numbers, it's going to be very, very difficult. So to my point of view, this is priced in the market. The market had a very strong performance. What the people need to ask themselves is, are we buying right now some future performance on the market? Are we getting into a position where by supporting this extension of the equity rally, considering what is happening on the bond market, and that could continue in the coming months, are we not in a position where at some point there will be some setback on the equity market, some consolidation that would be necessary because a lot is priced in? The bond market is not particularly supportive for a further equity rally. So that's the question that you need to ask for the coming months.
Interestingly, Elon Musk has been touted as the new head of an efficiency department. He has pretty ruthless methods when he gets in a position of power. For example, he slashed Tesla's payroll quite significantly a few years ago, but also Twitter when he bought out Twitter. What are your thoughts on Elon Musk as a new efficiency czar?
You know, when you are the manager of a company, the founder of a company, the buyer of a company like X, it's logical that you want to be efficient because you respond to your shareholder. And at the end of the day, you want to make the most of your investment and you want to make the most of your company. I'm not sure that you can apply the same kind of method to a state. And this is something that is very, very different. And my thought about the connection between Donald Trump and Elon Musk, I think it's not the expression of something I would support. I think that this is something that is in a way dangerous.
Coming to various sectors now, we saw mid-caps and small-caps benefiting from the election results. Are they right to be reacting in such a big way? And secondly, bearing in mind the calls that Donald Trump has made, for instance, to Vladimir Putin already, although he's not yet president, but president-elect, how do you think the defense sector is going to react to those kind of developments?
Okay, the first one, when it comes to small and mid cap, and again, we discussed that issue, and I think that we need to reiterate it after the very strong performance of last week. Yes, the policy of Donald Trump will be supportive for small and mid cap company, because it will support the earning, it will support the growth of those companies, and that's what is very positive for the stocks. But, and there is a big but, it also depends on the level of interest rate, long-term interest rates, because usually the small and mid-cap companies are companies that need a lot of financing. So it would not be very nice for them if the interest rates continue to go higher. So you need to ponder those two elements. I think that for the time being, the EPS is what is taken into account by the market. But again, look at what is happening on the bond market, because this could be a kind of hindering factor for further strong performance for small and mid cap. Nevertheless, as I told a few months ago, I like small and mid cap because in relative terms, they have underperformed. Trump policy is supportive for them. but be careful with that element. When it comes to defense, yes, defense stocks benefit. I don't like to use the word, but they benefited from the fact that you have war in Ukraine. Okay, maybe we will see some developments, but it's still yet to be confirmed that there is clear development on that front. You can speak to somebody to understand his position. It doesn't mean that you are going to conclude an agreement with that person. But let's say that the Ukraine situation is evolving in the direction of a ceasefire. You still have conflict all over the world. And we are living in a situation in which the Middle East tension remain. And it seems very difficult to foresee that something good could happen there in the very short term. So yes, it would be some kind of hindering factor for the performance of defense stocks. But nevertheless, I still think that a more uncertain world, a more confrontational world is a world in which defense stocks can benefit.
Let's come to Europe now. The reaction by European stock markets was very subdued. How do you explain that?
Two factors, on the one side, will Donald Trump go for the 10% general tariff that he's mentioning because a European company would suffer? And that's one of the reasons why in fact, they performed poorly last week. And the second element is the issue of Germany. With now the election looming in Germany, we all knew that next year there would have been an election in November 25. Now it seems that it will be before March of next year, depending on when Mr. Scholz is going to go for a confidence vote in the parliament. It seems that it's going to be quick. So we are heading towards a period of election campaign in Germany, which means less involvement of Germany in the European affairs, i.e. in the Ukrainian situation and etc. So it's a kind of retreat. Europe is going to be blocked until we have the result of the German election. And the polls are telling you that there will be a big change in terms of a potential coalition in Germany after these polls. So I think that it's not necessarily something very good for Europe in the medium term.
Coming to China didn't react at all to the elections results. Do you think they should be reacting a little bit more to future tensions on tariffs, for instance?
Okay, this morning the performance in Hong Kong was quite weak. And I think at the end of the day, this is the result of a disappointment concerning the new measures that the government announced on Friday. No boost to consumption. No real boost to investment, purely something which is about debt swap, and because they need to do that, there is too much indebtedness, and they need to make this hidden debt come back in front and be. So they are dealing with a situation that normally would need expansionary measures. They are dealing it with try to make the bottom line, I would say, a little bit better than it is. So it is not sufficient for the Chinese equity market to be supported. And this morning, the reaction was poor. Yes, they should be careful with the tariff because it seems that this is a place where Donald Trump wants to act. And some say that the Chinese decide not to go for a big support for consumption and investment because they want first to see what is going to happen on the tariff side before deciding any other potential measure. But in the meantime, we had numbers coming over the weekend. The PPI numbers were poor, minus 2.9% year on year. The CPI number was poor, 0.3 instead of 0.4. And there is still this deflation threat that is coming in China. So waiting can be very dangerous.
Lastly, it's a big week ahead for inflation numbers. What are your thoughts on that?
I hope that the numbers are going to be satisfactory because in the current context where you have a lot of interrogation about the ability of the bond market to support these, first, indebtedness of the United States, which is not going to improve. Second, the inflationary risk of a tariff, it would be bad for the bond market if suddenly the inflation number shows a higher than expected number on Friday and Thursday. Sorry, I think it's Thursday and Wednesday.
Yes. Thank you very much, Francois. That's all we've got time for.
Welcome.
Thank you. Bye-bye.
Bye-bye.